Every loss brings me to the next gain. You can't resist losses. If your setup fails, you're out. People are always trying to predict what the market's going to do. I don't predict, I react. The best predictor of future behavior is past behavior. The same with a stock. Do you want to find a stock that's going to double? Find one that's already doubled. Whenever a breakout occurs with a stock moving into virgin territory, and that is it's never traded there before, this is the most bullish situation you can buy. Think about it. There isn't one person who is long and has a loss. That's kind of amazing. You got to get to the point where you use a setup that says a stock should behave in a certain way and it doesn't, and you immediately sell it and you take a small loss. And you let your stop loss do it. You got to do that. That's the only way to survive in this game. And I don't care. I don't care if I take these small losses. Every loss brings me to the next gain. All right? Here's Cisco, one of the greatest stocks in the 90s. Look at the Green Line Breakout here. This is a monthly chart. Look at this. Breakout here, breakout here, breakout here, breakout here, breakout here, breakout here. Finally, it reaches a top that isn't surpassed for 3 months. There's your next green line. You know how many people probably bought Cisco up here or continued to buy it here thinking they got a bargain? It's never passed its green line, all right? Since 99. This is not easy. If it were easy, everyone would be millionaires. I think people, especially starting out, should start slow. I really think they should start with one share of stock and try that for a while and see if they have a good temperament for it. This is when Davis made his fortune. The Dow had come back and was trading at all-time highs. When he was making his fortune trading, it was a stage 2. This is the 30-week moving average. That was rising, and the market was rising above it. Stage 2, which I learned from Weinstein, is like the sine qua non. In Latin means that without which nothing. You have to buy stocks in a stage 2, and you have to buy when the market is in a stage 2.
All right, welcome back, everybody. It's my pleasure and honor to introduce the next presenter of the TraderLion Conference, Dr. Eric Wish. Dr. Wish is an individual trader and professor emeritus at the University of Maryland. And many of you probably already know this, but for those who don't, he was the first person who I learned trading from. I took his class at the University of Maryland, and it taught me the key principles that probably saved me years off my learning curve. So I owe a tremendous debt to Dr. Wish. Really excited to hear his presentation today on Greenline Breakouts, the Oversold Bounce setup, and the EMA Bounce setup. Going through those, as well as how he manages risk and also his sell rule. So Dr. Wish, thank you so much for being here, and yeah, a pleasure to have you. Thank you.
Thank you, Richard. It's really an honor and a privilege to talk with you like this, and to let other people hear what we want to talk about. It's every professor's dream that they have a student who goes on based on the course that they've taught and becomes another teacher and makes such a difference in the world, and that's what you've done. So congratulations to you and your family for all the great work you're doing at TraderLion. I know it wasn't a straight line. I know you started off in engineering but found your passion in trading and in the stocks, and that's just fantastic.
Yeah, and I also want to mention just a huge thank you for writing the foreword to our book. That meant a lot. It's great to have you be a part of it, because it wouldn't have happened without you. So thank you so much for doing that. And I also want to mention just a little bit more detail about the class. Obviously, I took that back when I was a junior at the University of Maryland. I forget the exact title of the course because you changed it a few times, but Intro to Technical Analysis and the Stock Market. And I went on to TA a few years, and every time I got the class, because I took it as many times as I could, including TAing, I learned something new. So really looking forward to today, and I think it will reinforce a lot of great concepts for folks, help out a lot of people who are doing this part-time, as I know many people watching are, and hopefully everybody will learn something new. So thanks again for your time, and looking forward to it.
Sure. And today, actually, I got an email from someone who's now living in New Zealand and is actively managing his money and trading. And he's did a fantastic job based on what, started off with what I started teaching. And so there are loads of people around the world who contact me and say, can I take your course? Even at the university, when I tell a professor what I'm teaching, they say, can I take it? Because as you probably know, in the United States, they don't teach financial literacy education. I think the only thing I got was in the 6th grade, they told me how to balance a checkbook. And
We didn't even get that. So you're step above. Yep.
so I have, as you know, I am committed to teaching young people what I wish someone had taught me at their age. And for the audience, I am not a professional big-time trader like a lot of the audience is. I had a career, and I still manage my money, and I've been able to retire, and I've done quite well in the market. But I've been doing this since the 60s when I was in high school. And I hope that there's people in your audience who want to still have a career and not be glued to the screen every day, because I wasn't able to. Now that I'm retired, I watch a little more, but sometimes that's a double-edged sword. Sometimes it's not helpful if you're always watching your stocks. So I'm trying to adjust to that now. But what I try and do is to teach people some tools they can use that I found useful, and basically you can take whatever you want. If there's nothing valuable for you, don't take it. And I tell the students, don't trust what I say. Try it out. See if it works for you. That which works for you, go ahead and use. So that's what I'm doing today. And I usually tell people that sort of in my advice, I'm not really giving advice, but if they think I'm giving advice, it's worth every penny that they paid for it. And by the way, I've never accepted money from that. All of the teaching I did at the university, the money was basically returned to my department to keep researchers going and to keep the research and substance abuse going. So anyway, I'm just extremely happy to do this. Is there any other questions you had, Richard?
No, I think that's good context. I hope that folks out there, especially younger folks, take a lot of this to heart, and really looking forward to diving into the principles and setups that you use and continue to use that can help a lot of people get started. So let's go ahead and dive right in.
Right, and this is just the beginning. I mean, I hope it's okay to tell people that we're going to create a course. We're going to make it available to people who want to take it in the next year, and all the material that I'm introducing today will be done in much greater detail, and we'll be doing a lot of it in the software that you've created, Deep View, and I think it's going to be very exciting. So let me get going, because as I used to say when I present, I like to stay close to my data, and so you're going to see a lot of slides today. You ready?
Let's do it.
Okay, so this is just something that's actually Enron, and I'm just saying all of this is educational. I'm not qualified to tell you what to do with your money. I'm just educating you to learn, to teach yourself how to approach the market and how to perhaps do quite well. I just want to tell you, I was big into stage analysis, into the 30-week average. And way back, I know this slide popped up, and I actually bought a put option to bet that it was going to go down, but I hadn't done it before. I didn't stay with it. But I'm just telling you, just by watching the stock, it was possible to see that something was going wrong with it when it was entering a stage 4. That slide was done by my late co-instructor and IT person, David McCandless. He died in February 2022 when he and his daughter he finished teaching the course with me, and then he decided to go with his daughter and to build a sailboat, and they showed us pictures as videos as they were building it, and they took it out one day in Baltimore Harbor, and the water was horrible. The wind was horrible, and I guess the water, and it capsized, and he died by the time he reached shore. So thank you, David. I know you worked with him. Did you want to say anything to what I said?
Yeah, of course. David was a huge part of your class. He was so kind and helpful to every student who had questions. He worked with all of us TAs to create the quizzes, create all the educational material, helped you a ton with the slides, and my favorite part, the animations that he would do to help teach some of the concepts. David was a huge part of the class. I thank him so much, and very very sorry for his loss. 100%. Very thankful to him.
Thank you. And at my research center on drug abuse, David was the librarian for 20 years, and he caught the passion for the market by listening to me, and he really took off with it. And so thank you, David, and Amy Billing, who helps me now with the course and who provided some of the slides that I'm going to be showing today. She knows a lot more of IT than I do too. All right. In 2005, I entered the Barron's Stock Challenge for business students, even though I never taught a business course, even though I'm a research psychologist, by the way. And I entered and came in, as you can see here, 5th in the country among all the business professors. And I used this to go to the honors program. Remember when your course was on the honors program, and what basically in 2005, I went to them and said, I've been teaching a course on drugs in American society. I'd love to teach a course on stocks. It's my second passion. I showed them this. They asked me to write it up, and that's how the course that you took got started. And it was an honors course for many years, of which, you took it that way. Since then, I've done a lot of public speaking. I was written up by IBD and their Real People, Real Success. I actually ran IBD meetups for a time locally, and then I did a number of talks at the AAI conference locally. This was before you had all the Zoom stuff, so it was stuff that I could only go to. All right, now, for those who need help falling asleep, there's an article, an interview done by me on what my history was, how I got into it, why I teach the course, all of that. It's 10 pages long. And I was interviewed by Les Masonson, whom I really liked. Les had written a book, I think, Buy, Don't Hold, about buying ETFs and using relative strength to do that. And I really like him. So anyway, I got to tell you what happened recently with Les. So first I'm going to show you this. It's sort of out of sequence. I may not have showed it, but I have to show it. I've shown this on my blog many times, and it always works. So listen, on day one of my current QQQ short-term uptrend count that began on April 25, it's now in the 63rd day, all right? QQQ since that day in April 25 is up almost 20%. TQQQ, which is the triple leveraged bullish formation of QQQ, designed to move 3 times as much as QQQ does, in the same period, TQQQ has advanced almost 66%. Okay, I revised these right after today's close. All right, this 66% performance was more than all but one of the NASDAQ 100 stocks. AMD went up 72% in that time, and all but 6, those are listed, of the S&P 500 stocks. So the moral of the story is buying TQQ on day one beat 95% or more of these stocks and these indexes. So, if you think you could buy these in advance and know it was going to be great, go for it. But I'm suggesting that a number of you might want to try this out. I have posted on my blog a number of times this analysis, and it always works as long as the short-term trend count lasts for, a reasonable amount of time. And I've actually tried it. I just want to tell you, on day one of a new uptrend, right, you're scared because the market's been in a downtrend and you don't believe that the uptrend has started. But I'm telling you, if you hold your nose and just buy a little, it might work out very well. All right? All right. So, Les had seen these analyses, and he is publishing a book now, the QQQ and TQQ ETF Profit Machine, and it's coming out in a couple of weeks, and I wanted to just let you know to be looking for it. And I think maybe you'll interview him at some point, Richard.
Yeah.
Yeah. All right. So, in my class, I've been reading on this since the 60s, 1960s. And there are just a handful of books that made a difference. And these are the books that I have I posted on my blog. And the first book that I teach the kids, I have them read, is How I Made $2 Million in the Stock Market by Nicholas Davis. And let me just tell you, that book is easy to read. And if you've never read it, you have to read it. That book turned me around on how I approached the stock market. Because the first book that Merrill Lynch gave me when I opened an account with my mom way back then, I had to do it with her because I wasn't 18. And it told you a lot of stuff that doesn't work. Davis turned me around. And he also has another book, Wall Street, the Other Las Vegas. And the second book that I helped people, I had them read, was Stan Weinstein's book here. And I know you're going to be talking with him. He's going to do one of the sessions. And he told me all about stage analysis, which has helped me tremendously. I then went on after that to get IBD in the 80s. And this book, How to Make Money in Stocks, was the Bible of the course. These other books are phenomenal. Mark Minervini, of course, I call him the modern day Nicholas Davis. And there are a number of great books that summarize this, John Boyk's book, but I suggest you go ahead and look at these three books and go ahead and read Davis. So Davis influenced me. He influenced O'Neill because he made $2 million while he was dancing around the world. Remember, back then, he would send telegrams into his broker. You didn't have what you have now, okay? So when I went to Mark Minervini's gala in January of this year, I met Stan Weinstein. So that's him and yours truly. And a few years earlier, in 2016, I went to Mark's course, and that's him and me. And we haven't changed a bit since then, right? So anyway, Bill O'Neill, before you entered his workshops, he had a big barrel, I am told, that said deposit ego here. So I used to pass this around to my students, and basically the idea is you're in it to make money, not to be smart. You're not to try and the market's always right. You got to take your losses. You can't be afraid to take losses. You're going to take a huge loss, and that's going to be it. You have to take your losses quickly. All right, this is the mantra of the course. In an uptrending market, buy visionary rocket stocks that are bouncing off of support, or that are oversold, or that are breaking through resistance on above average volume. I quote myself a lot in the course to the students. Anyway, it takes 14 weeks for them to learn how to do this and to practice doing it using a virtual stock market system, which was the same one I used in the Barron's stock market competition. Okay, so I do this, if I were present, or if I could do this, I would ask you, how many, do you prefer buying stocks at new yearly highs? And I used to do this at AAII. They were a little bit older people, and I would, out of 100 people, maybe I would get 10 people who would raise their hand. And then I would say, how about stocks that are all-time highs that never traded higher? Would you like to buy them? And maybe out of 100 people, I get 2 or 3 people, okay? Well, this is what Nicholas Davis said way back in the 60s. I buy the most expensive stock I can afford, and I buy it in round lots. That means back then it was 100-share lots. If you bought for less than 100 shares at a time, it cost you extra in your commission. And by the way, when Davis was trading, it could cost him about $100 to buy and $100 to sell. And that's how when I started out, it was like that. So imagine you're down $100 or $200 the moment you bought. So anyway, someone wrote him after his book, and in a subsequent edition, he added this, he answered questions. And one of the questions was, when you use a historical high as a buy point, do you hold literally to the historical high? That means the all-time high. Or can you buy safely a stock making a new high for a lesser period? That is 5 years. It also shows stepped up volume. And Davis's answer was, I strictly adhere to historical, that is all-time high. I think most people forget that when they read the book, okay? So, this is showing the Dow in 1929 to 1956, and I drew a green line here at the top that the Dow had traded at in 29. Okay? And you can see, you know how people will say to you, the market always comes back? I'll say, yes, it did. The Dow in 29, it took 25 years. So look, here's where it came back in 1954, 55. Okay? This is when Davis made his fortune. The Dow had come back and was trading at all-time highs. This is when he made it in 58 to 60. I want to just show you this. When he was making his fortune trading, it was a stage 2. This is the 30-week moving average. That was rising, and the market was rising above it. Okay? Stage 2, which I learned from Weinstein, is like the sine qua non. In Latin means that without which nothing. You have to buy stocks when in a stage 2, and you have to buy when the market is in a stage 2. All right? So, I found this quote online. I found a lot of stuff online that people say, and it says, this is Larry Height said, the second item is something that Ed Secoda, I think he's a market wizard who was a brilliant trader, taught me. When a market makes a historical high, it is telling you something. No matter how many people tell you why the market shouldn't be that high or why nothing has changed, the mere fact that the price is at a new high tells you that something has changed. And I have a little note here. And I actually ran this by Mark Minervini before I said it. I said, do you mind if I say this? Mark Minervini's tremendous returns in the U.S. investing championships occurred when the market index was making a series of all-time highs. And basically, that doesn't take anything away from Mark Minervini's accomplishments. He beat everyone in the competition. All right? But what I'm saying is, you have the greatest chance of making a lot of money in the market when it is in a period of all-time highs, by the way, like now. Okay, hold on. So, why do you need a setup? Because a setup tells you that a stock is about to move in a direction now. Everyone, you've got to trade using a setup that you think works for you. Why? Because if you have a setup that tells you the stock should move up, or if you're shorting down, then you always know when it has failed. If it has failed, you exit immediately. And I have a saying I used to tell the students, every loss brings me to the next gain. All right? You can't resist losses. If your setup fails, you're out. All of the setups presented today assume the relevant index is in an uptrend. Why? I'm not going to read this whole quote. You can read it later. But the critical point, the main point is what I underlined. The critical point to remember is that the same price pattern that works so well in a rising market is likely to fail miserably in a declining market. I learned this. I come out of a bull market where I had made money, and then I said, well, I know what setup works. I'll just keep doing it. And I would lose and lose and lose and lose. And in the beginning, you basically lose all your profits. So you go back and forth, until you figure out this game. Okay? So, how do I determine the market's trend? And by the way, for those who are IBD fans, you can look at their follow-through days and what they say. I have my own things that I follow. In addition, I have a general market index, a GMI, which I post on my blog. I also have the short-term trend count, which I list on my blog. Remember that example I gave you with TQQQ? Well, you would have known if you're following my blog when I said it was day one of a new short-term uptrend of the QQQ. And the final thing, and I just started using this, is what I call the 10-30 weekly chart of the indexes. Okay? And, you know, there are people who do the technical analysis, and they keep having so many indicators and so many things. My approach, I'm not that smart. I just want it to be simple. You know, the KISS, keep it simple, stupid. I really like that. So, I just updated this. Fortunately, Richard allowed me to present after the market close. So this is as of the market close. The GMI, all of these components, I'm not going to go through them now. All of them are yes. The GMI2, almost everyone is yes. Some of these are uncorrelated. They're never going to get 9. But basically, I look at these things every night. I update this, and I know what the GMI is. And when I post, I tell you what it is. And these just are very sensitive indicators that I keep doing recording because it keeps me focused on what I want. Notice at the bottom, U63, we're on the 63rd day of the uptrend. The QQQ and the SPY above their 10-week average for 13 weeks. That's very important to know. And also, I'm sorry, got to go back. The 10, I'm going to show you this in a minute. The 10-week average of the Q is above its 30 for 5 straight weeks. Okay? You can look at this. In our course, we will explain all of these to people. So, when the GMI is above 3, 2 days in a row, it turns green. When it's below 3, it turns red. I just want to show you, this is showing you the QQQ and the GMI signals when they're red and green. Look at this. This is the last time we had a big drop, it turned red over here. And look what happened. And then it turned green, and now we've been green. This only goes through the 15th, but it's still green. I told you the GMI is still 6, okay? Now, this is important for you to look at because, people are always trying to predict what the market's going to do. I don't predict, I react. And I think that's what Jesse Livermore did too. And I think that's what O'Neill did too, and Davis. But anyway, look. Just look at this simple chart. It shows you the 10-week average of the Q, the 30-week average, right? And then this is the weekly average, all right? So we have gone through periods. When we had a good market, look at 19. The 10-week is rising above the rising 30-week. By the way, 30-week average, stage analysis. You've got a rising 30-week, all right? Then you had a period where the market closed, the Q closed below the 30-week. That's when I get defensive, all right? It comes back, so I'm waiting, it's below. Now you come back above it, you close back above it. The 10 is above the 30, and you had 2 years with the 10-week above the rising 30-week. And then all of a sudden, you get it. The weekly close is closing below the 30, the 10-week closes below. I'm out of the market, right? And you wait for it to come back and for the 30-week to climb up like this, and now you had a 2-year period to be in the market. And then you had this big drop in April. And, all right, here's the first sign. You're closing below the 30-week, the 10-week closes below, I'm out of the market, I'm defensive, and then, bingo, you're back above the 30, and look, the 10 is above the 30 again. All right. By the way, I want to just tell you when I started teaching, it was after the 2000 drop when my friends, you remember the internet collapse, and my friends, my colleagues are watching them and they're losing their pensions, they're losing their hard-earned money, and I am not bragging. I am sitting there in cash, and I had moved all of my TIA, that's the pension money and education. I got out that time at around 100 and something. I don't know if it was 110, 120. That's what my mutual fund's at. And I got out. And a few months later, my mutual fund was trading in the 30s. Can you imagine how you'd feel if your pension that you're relying on, your retirement money, collapses like that? I never let that happen, and I did the same thing in 2008. And that's why I teach people, because you have all the pundits telling you can't time the market, you can't get out. And William O'Neill has said, those who tell you it's impossible just don't know how to do it. All right? So that's the Qs. And this is another formation, a Guppy chart, I call it, after Darryl Guppy, who's the most famous technical analyst in Australia. And these are 12 moving average. These are the shorter and the longer ones. The red ones are the shorter. They move faster than the longer ones. And I modify it. This is the closing. This is a daily on this one. This is the closing every day. And basically, all I'm trying to show you is here's a down market. When I see this in a stock or in the market, I'm defensive. When this comes back and the price comes above all the moving averages, notice how the price is leading the moving averages higher? I'm happy to be in the market then. So that's just another way that you can, these are the exponential moving averages that it uses. But this is another way to track the trend of the market. Now, here's the SPY, the S&P 500 thing. And here again, here's 2024. Here's the drop. Here you're down below the 30. Your 10-week is below the 30. And now you came back above here. Look. Had a little blip here. All right, but your 10 is still above the 30. Everything's good until you got that big drop in last April. Then things came back. Here's the price coming back above the 10. And now the 10-week is above the 30. And for me, I'm moving my money back, my mutual funds. I'm moving my retirement funds. I'm using my IRA, all of this stuff back into the market, you know? So I'm kind of amazed that all these people telling you you're not in a bull market, that the market isn't strong, that it's gonna end and all that. You know, don't listen to that. Follow the market. You know, I tell Richard, you'll remember this. I tell them this anecdote. If you're crossing the street and you're in the middle of the street and you see a truck bearing down at you on high speed, you sit there and say, I know he's going to stop. He always stops here. Oh, he's my friend. He's not going to run me over. All that stuff that fundamentalists say. You know, what do? You get the hell out of the market. You get the hell out of the street. And that's what you do with the market. The market turns. Your indicator suggests it's turning. Don't listen to everyone. You know, I listen to CNBC just a few times, but I always have it on mute. You know, and by the way, you see this green line? We're going to talk about it in a minute. This means that the market is trading at a highest, this is all-time high. So you've got a situation where the market is trading at all-time highs. And remember what I showed you with Davis, with that, and what, you know, people make money the best in Minervini when the market is trading at all-time highs, okay? So let's go to setups. First one I'm going to tell you is the Green Line Breakout. All right? I found this. I dug this out. I'm trying to figure out, why did I think of this? And I used to get monthly charts from securities in Boston. They sent them to my home. This is in the 60s. And I noticed that there were stocks that went up, hit a high, and then in the bad market that came, fell down. But then when they broke through to new highs, all-time highs, it was amazing. So this is Taser, famous stock. You know, Taser came public, went all the way up to 21, and then fell down to $3. Okay? At some point, it came back above 21 here to an all-time high. You see this line? This is my Green Line Breakout, but I didn't know it at the time. But that's what I did. So what happened? The stock went from 3 to 21. That's a seven-fold increase. And all the people are saying it's too high. It's already gone up seven high, whatever. You know what it did? It went up seven-fold again. And I tell the kids, as a psychologist, I know the best predictor of future behavior is past behavior, right? The same with a stock. If you want to find, and David Ryan talks about this, O'Neill and Davis talked about it. They love to buy stocks that already doubled. You want to find a stock that's going to double? Find one that's already doubled. Okay? So I rode this stock up. And Richard, should I tell him the story about my big loss?
Yeah, go for it.
Because people don't usually tell you about their losses, but, you know, if they're honest, they do. I went to a meeting on drugs in Baltimore, and I had a position in Taser, and I said, I don't need to put a stop in. I wasn't religious about using stops then. And I came out of that meeting, and that meeting cost me $28,000. And I tell the students the moral of the story is don't go to meetings in Baltimore. No, really, the moral of the story is put in a stop, always. As Mark Minervini says, if you don't use stops, the market will stop you. As soon as I buy something now, I figure out where I'm wrong, where my setup is wrong, and I put a stop in. You make it good till canceled and leave it alone. Unless the stock really performs and goes much higher, you can move your stop up to break even or to save some of your profit. Okay? All right. So, on a monthly chart, you start off on a monthly chart, but the green line will show up on all your other time frames. Draw on a monthly chart and at an all-time high, not surpassed by at least 3 or more months. Bars. That's bars. Each bar is a month. So 3 or more. So basically, you're looking for a stock that hit an all-time high and rested for 3 months. Okay? And except for a recent IPO, it can be not surpassed for a few weeks. There are stocks that what's the life cycle trade is excellent on this, but they do it a little differently, but they're doing the same thing as a green line breakout on a lot of things. Look, Jesse Livermore, I once read, wrote something like this. He loved to buy a stock that came out, went up for a while, came down, and then after a while broke through to an all-time high. Okay? So, again, green line indicator on a monthly chart, draw a horizontal green line at the top of a bar reaching an all-time high after it has not been surpassed for at least 3 consecutive bars. Now, when a stock closes above its top green line, that's an all-time high, it is a green line breakout, a GLB. If it then closes below, it is a failed GLB, and I sell immediately, but closes below, because lots of times the stock will go through the green line and then come back up below it intraday, but then close back above it. So I like, if I have to, I'll put a stop in for GLB or an alert. But if I can watch the market near the close, I'll see if it's going to close below the green line. Okay, so for a minute, this is a test. For a minute, look at this. David built this for me, by the way. Just look at this. Where would you draw the green lines using this definition? Just think it through to see if you're right. All right, here, absolutely. Reaches a top, this is a monthly chart, reaches a top, doesn't exceed it for at least 3 months. Then finally it breaks here. That's a green line breakout. This one failed, came back below, bounced, and then here you get the real green line breakout. Maybe it occurred with high volume or not. Now you're trading here continually at all-time highs, okay? So, oh, I gotta finish this. Up here, did you draw a green line here? I think it's gonna be here. No, it's only not surpassed for 1 month. You need 3 bars before you can draw the green line. Okay? Now, it's amazing how this works. Here's Cisco, one of the greatest stocks in the 90s. Look at the green line breakout here. This is a monthly chart. See, monthly? Look at this. Breakout here, breakout here, breakout here, breakout here, breakout here, breakout here. Finally, it reaches a top that isn't surpassed for 3 months. There's your next green line. You know how many people probably bought Cisco up here or continued to buy it here thinking they got a bargain? It's never passed its green line. All right? Since 99. Look at Microsoft. The same pattern. Here's your IPO green line breakout right here. A little one here that failed, then another one, another. Look at them all. And then Microsoft had a green line that wasn't surpassed. Think of all the people who wasted their time and money holding Microsoft for 15 years until you finally got the green line breakout here. Okay, in 2015. That's how you play a winning game, a winning hand here. Now, this is gold. Just want to show you it can work with gold. I wanted to show you this famous Facebook IPO. Facebook opened here, went a little higher at about 45, came down, and spent, what? A year below here. And then, boom, here's your GLB. And look what it did since. Here's your green line, another green line, and formed another green line top. Some of these charts have not been updated since then. All right? Now, someone I know, Richard Moglen, I followed him a lot on X. He said this, he quote from William O'Neill, so the first thing I learned about how to get superior performance is not to buy stocks that are near their lows, but to buy stocks that are coming out of broad bases and beginning to make new highs. The only mistake here is he should have said all-time highs. I'll show you that in a minute. In fact, do you know how William O'Neill learned this? There was a guy named Jack Dreyfus running Dreyfus Mutual Funds, and William O'Neill saw that he was doing so well, he went back and charted, that's Charted with a Boston accent, he charted the stocks, and when Dreyfus bought it, and guess what? They were hitting highs, new highs. And that was probably the beginning of William O'Neill's success. All right? Now, William O'Neill and IBD started this whole thing about how to find and own Americans' greatest opportunities. He did this in 2012. Bear with me. I'm going to get current in a minute. All right? So he had a bunch of charts like this. By the way, O'Neill, just about all the charts in this book are weekly charts. He didn't get sidelined by all the daily junk, the whipsawing. He followed weekly charts. Now, I know there are people here who probably work with him, and maybe I'm wrong, but that's what I surmise based on doing a lot of reading and studying his things. And basically, he would show, where he bought. By the way, you see this? That's a GLB. Where he bought, and he showed his formats, and he showed how he would add and add and add and add and add, right? Notice, by the way, these are stocks he made fortunes on. These things are taking 81 to 83, 2 or 3 years. How many people hold stocks for 2 or 3 years? But the real winners, you can do that if you have good exit strategies. Now, you know what I did? I went on Market Surge, and I took all of these stocks. I think there were about a dozen or so that he showed in that series, and I drew in the green line, and I also drew in where he bought. Look at this. Here's the Green Line Breakout. He bought somewhere in this year. Okay? Here's another one he bought. This is Netflix. Here's a GLB, Green Line Breakout. He bought after this Green Line Breakout. Here's Qualcomm. I remember this. This is a phenomenal stock. Went from 4 to 100 very shortly. But anyway, all I want to show you is, here's your Green Line Breakout, right? He bought it somewhere in 1999 and made money, but he was buying a Green Line Breakout. Here's Apple. More Green Line Breakouts. All right? So, I just found this. Someone posted it, and I went back to his book, and he says, O'Neill said in 176 in his book, as a smart investor, your job is to buy when a stock looks too high to the majority of conventional investors and sell after it moves substantially higher and finally begins to look attractive to some of those investors. If you had bought Cisco in November of 1990 at the highest price it ever sold for, when it had first made a new all-time high, and looked scary, you would have enjoyed a nearly 75,000% increase from that point forward to its peak in the year 2000. So let's go look at that chart again. See the green line there? That's what O'Neill is talking about in 1990, buying it here. So, the implications of all this is O'Neill bought many of these stocks after GLB or an IPO GLB base. He also bought some stocks before they had reached an all-time high, but all were headed to all-time highs. One way to pick winners is to buy at or after the GLB using setups. Don't focus on stocks or bases that are far below all-time high. I'm amazed when a lot of people who practice Can Slam and IBD are looking at cup with handle in various bases, and they're looking at stocks that are substantially below their all-time high. I know why they do it, because I watched some of these presentations. They think they can get in early, like what do they call it, a sneak cheat, and they try and get in early, like when it's first forming a stage 2 base. And look, it reached an all-time high and a green line, which is much higher, so why miss all that? But you know what? Think it through. When you're in the stock at the time it's starting at stage 2 uptrend, you have no idea if it's going to ever go to an all-time high. So if you get in it early, you may have lost time, you may have failures or whatever. Why not get in at the perfect time, right? When it's breaking through all that resistance to a new all-time high. And basically, after seeing Christian Flanders saw my presentation at the Minervini Gala, and he said something like this. I don't know exactly. I'm sorry, Christian, if I misquote you. But he said a lot of his winning stocks, remember he had huge gains in the investing championship. A lot of them had been GLBs. Okay? Remember, if you buy something at an all-time high, there's no overhead supply of sellers who bought at a higher level and have losses. In fact, Stan Weinstein said it better. I'll show you in a minute. I love this quote from Burton Crane. There is no magic about buy signals. They are only devices by which we call our attention to stocks that have already begun to attract the attention of others. I tell this to the students to say, you don't want to be a pioneer. You want to buy stocks that it looks like you have a setup that basically shows that people are buying. They're buying it preferably all-time highs. It means, and on high volume, it means that the big guys are already buying it. I love this quote I just found, Richard. I don't know, I just in case, this is someone who put it on X, and I hope that Stan will say this is accurate. He said, whenever a breakout occurs with a stock moving into virgin territory, and that is it's never traded there before, this is the most bullish situation you can buy. Think about it. There isn't one person who is long and has a loss. That's kind of amazing. So I hope by this time I've convinced you to at least look at the possibility that you should be focusing on stocks that are either breaking to an all-time high or have already reached one, and now you can find a good setup to find it when it's buying off of support. Okay? So I wanted to show you this. Jim Roppel was written up. I think this is IBD. He had a famous trade. He made $1 million and he retired, and then went into the business based on this. He bought Broadcom. All I want to show you is, notice that he bought, this is what one is, he bought when he didn't know, maybe he didn't know it, he bought when it was hitting an all-time high and on a GLB. Okay, now, does this really work? On my post, I was, in the down market in 2008, I was in cash, I had gotten out, I avoided it, and I did on this, and I talked about a number of stocks that are hitting all-time highs. Look, if you've got a market that has been horrible, I love it, because it means you don't have many stocks hitting all-time highs. The few that do, that may be the new leader. So I talked about GMCR, all right, and other stocks, and here's what it did. At the end of 08, beginning of 09, here's your GLB. It had a 13 bagger after that, went all the way up to here, to 130 from around 13. All right? In fact, I told my stock buddy, who's brilliant, and buys a lot of stocks on technical analysis, but basically on concept, and, she's saying, in your office, didn't you just buy Keurig K-Cup machines for your kids, your students, for your workers, I said, yeah. She says, that's what GMCR does. Wow. So I didn't know the reason, but I'm telling you, I'm going to say something that a lot of people might not like, but I think it's true. If a stock is trading at an all-time high and it has a GLB, I am less likely to even care what they do. I know that sounds silly, but someone cares like they do. They pressed it to an all-time high, to a GLB. The other thing that I'll just say now, get it off my chest, everyone talks about relative strength, the relative strength line and everything. For me, what could be better relative strength when a stock has a GLB? Because I know this, because I track it. Like in the past year, there have been no more than 100 GLBs on a day out of over 6,000 stocks. If you're one of the 100 out of 6,000, I'd say you are showing relative strength. And lately, the number of stocks hitting an all-time high is roughly about 30 to 40 to 50 out of out of 6,000. That's good enough for me. So let me show you some. Here's Palantir. See the GLB? Okay, now, again, I'm not going to belabor this. A lot of you will say, I would have bought it here. And you know, you would have been right because it did have a GLB. But how many stocks that have a pattern like this that you bought early never did this? They just, fizzled. All right, that's Palantir. Here's GEV. A lot of people are talking about. This should be orange because once I have a new green line, I make the prior ones basically orange. But look at this. Here's your GLB. It went flat for a while. Wham. Look what it did. And then recently, it broke to an all-time high here. It's off to the races again. All right. I wanted to show you this one to show you that you might say, hey, look at this. Twilio is now in a stage 2 uptrend. Here's your 30-week average. It's turning up. Why don't I buy it? And you know what I say? It's got a green line top here. I'm not touching it. This may fail. Okay? Look, I want to show you a daily example. Eat, Brinker, which is really good. Look at the GLB here, right here. Look what it did. And I'll give you a quick preview of what we're going to talk about. You see this little line here? That it didn't break after GLB until here? That's the 8 EMA. The 8-day exponential moving average. This pattern happens a lot. So where can you buy it? Either you buy it here, or you buy it off the bounce of the 8, the bounce of the 8, the bounce of the 8. It never touched the 21 again since here. A lot of people they use the 21, which is a great indicator. But notice, a rising stock stays above the 21. Look at that. All right. Now, here's IBIT. This was a green line breakout right here. I actually bought it here on this day. All right. Boom. Notice how it's staying above the 8. And then it formed the green line top. Okay. I think it's broken it already recently. I'll show you in a minute. All right. So, all right. Again, to try and convince you, on my blog is a table like this that is updated every day throughout the market. All right. And this is what it looked like on today. And what I did is I went through and I selected successful GLBs. Keep in mind, these are GLBs that didn't fail, that the stock moved up. And all I'm trying to show you is it's not too late lots of times to buy a stock at a GLB. So HWM in 2023 had a GLB at 51. It's now at 189, up 270%. And then I added some in 2025. Well, here's GEV. Here's its GLB at 447. It's now at 644, up 44%. Look at this. GLBs can work. Breaking to an all-time high after a rest is not a sign of extension. Usually, it's a sign of something great happening with the stock. All right? So, to put it all together, I buy stocks trading at or above their last green line top. So everything I'm going to show you assumes that there's been a green line breakout and the stock is above it. Either it's breaking out or it's above it. Okay? How do I find GLBs? One of the things I like to do in my presentations and my teaching is not just show you the pattern, but show you exactly how I find it, because I want you, my students, to know how to do what I do. And that's what we're going to show in the course we're going to have, Richard. I want people to learn how to do this so you don't need me, right? And you don't have to buy from me to find out the good stocks. You'll be able to do it, all right? I identify stocks that reached an all-time high today. I do this oftentimes at the end of the day. And I'm hoping, Richard, that you're going to create something really good to create the green line in deep view when we teach people this, so that you can save me the time of having to draw in the lines and find it at the end of the day. All right, on a monthly chart, I draw in the green lines. I told you where it's drawn. For stops trading below their last green line top, in other words, maybe they hit a 52-week high, I set an alert for when the stock trades above it. So if I find a stock that's climbing, but it's below its green line, the last green line top, I will put in a alert in my program to make it tell me as soon as it crosses it. Most important, the GLB fails if the stock closes below its top green line and must be sold. When a later higher green line is drawn, I color the prior green line orange so that when I go to it later, I don't see what's a green line and realize that there's a higher one. Okay? Now, here's some examples. Here's a GLB on very high volume. I love to have high volume here when the GLB occurs. Now, lots of times, goes up, comes back, retests the green line, and moves up again. Okay? Here's another high volume GLB, IBIT. I told you about that right here. Okay? And you can see the volume above the 50-day average of volume. Okay? HRNG had a high volume. Look at this high volume day on the GLB. See that? Okay? But look what it did. It failed. Went way up and came back down. Okay? It failed. Yeah, you never know if it's going to fail. Look, the other thing I want to teach you is this is another indicator. These are Bollinger Bands. See that? 15.2, high and a low one. And basically, statistically, about 90% of your prices should be between those two lines, which means that if a stock bounces off it, that can be a buy. So basically, these red dots that I use tell me that the stock was outside the top Bollinger Band and then closed below. Sometimes stocks, when they do that, rest. Like they rested here, they rested here. This didn't have much of a rest, it went back up. Okay, so I just want to tell you what that is. Now, again, here's the GLB failing. Okay? And one of the ways you can see it, you see this 8 moving average? It's above it, now it closes below it. That's a sign of weakness. All right? Now, here's another one. AS, very high earnings came out. GLB went sideways. Okay? We're going to talk about these blue dots in a minute. Here's another one, a monthly, showing you ODD, high volume. This is monthly GLB. Okay? NVIDIA. This is a monthly. Look at the GLBs on NVIDIA. One here, one here. Look at this fantastic one. Went from 50 to, looks like 140. Went sideways and now broke out again above its GLB. This was 53, by the way. Tesla. Look at this fantastic IPO GLB here. Then went sideways, formed another bunch of GLBs. All right, now it's below, by the way, its top GLB. I'll show you later. All right? Now, so that's the Green Line Breakouts. I told you how to create them and how to draw them in on your charts. It's very important that you do this. Now,
Dr. Rich, just jumping in before you do that one, could you clarify, do you buy on the close of the Green Line Breakout day, or would you buy intraday as it's breaking above the green line?
If it looks good and it's good volume, I would buy. I might buy. It's a great question. I might buy as it goes above it. But you know what? If it closes back below, I'm out. You know, and also, that's a great question, Richard. I tell a lot of students, do you know how you buy a stock in the morning and by the end of the day, it's at the low of the day, right? Or it's broken down. I tell a lot of students to wait and do a lot of their trading around 3:30 to 4, so you know where the stock is likely to close. So if you have a green line breakout and the stock is sort of going back and forth over the green line, I wait until near the end of the day to see if it's going to close above or below it. If it's closing below it, I'm out. Okay? The blue dot of happiness. This is the layout I have on my charting program. I put this there for my students because my students have these F keys. Daily chart. It's on a daily chart. Now, a lot of people use stochastics, but almost no one uses the one that I found by mistake, For a while, I used to do the 10-4 stochastic. And I'm not going to tell you exactly what it is, but it was a slower stochastic. And one day I noticed stocks bouncing when the stochastic got very low. And I looked at it and I said, oh my God, I thought it was the 10-4 stochastic. Somehow I put it in as the 10-1 stochastic. And it's a super fast stochastic. I call it SFS. I found it by mistake, but wow, is it amazing. Now, if you're using Market Surge, you can't do this because Market Surge has a stochastic. You can't change it. Okay? But if you use one of the softwares where you can manipulate it, you can do a 10-1. What does it do? It looks at the range of the stock of it traded, the highest it traded and the lowest it traded over the past, I'm going to say 10 days. All right? Now it looks at where is it in that range. Okay? If it's near the top of the range, it can be 90 or 100, basically. If it's at the bottom, it's at 0. Okay? So basically, you're asking, where is the stock trading now in its range of the last 10 days? Almost think about it as a stock bar, where the top of the bar, which is a 10-day bar, with the top of the 10 days is the top of the bar, and the lower is the bottom. Okay? But no one does a 10-day bar. Anyway, so I use for my layout the 10-1 super fast stochastic. I have those 15 2-Bollinger Bands. John Bollinger, when he introduced Bollinger Bands, says use the 20-day average with 2 standard deviations above and below that average. That's like the range above and below the average. I use the 2 standard deviations, but I use the 15-day because I found it worked better for me. For the moving averages, you can say I have the 80 EMA, the 21, the 30. I thank Mike Webster for making this famous, the 21 EMA, the 30 simple moving average, the 50, and the 150. All right, the 150 is like the 30-week with, stage analysis. And I have a volume and the 50-day average volume daily. And then I have the blue dot. So here it is. The blue dot is drawn on the chart, when the super fast stochastic went below 20, which means it was low, right? And then it crossed above 20. That is the blue dot bounce. All right? And it occurs, I like it best after a recent all-time high. Remember, I love all-time high stocks, okay? So you may have to go back and study this, but when I show you, it'll become clear. So, look. This, on my chart, is the stochastic, all right? The 10-1 stochastic. The rest ignore that. The 10-1. So, whenever the 10-1 falls below 20 and comes back, I do a blue dot. See there? And there? There? That didn't go below 20. Here's another one, and here's another one. Okay? And what I find, you see it's above the last green line top? In a rising stock, finding a stock that had a recent all-time high, this is an all-time high here, and then became very oversold and bounced, that's a blue dot. So look what the stock did. Look what it did here. Look what it did here. Look what it did here. All right? That is the blue dot indicator. Okay? And just think about it. Wow, isn't that great? If I can buy a stock that was so strong it recently hit an all-time high and now became oversold and is bouncing, what a great setup to try. All right? And then you just put your stop below it. Now look, you see right here, this bounce and this one? It's also near the bottom Bollinger Band, which is another plus. So it's getting near extended on the downside over here. All right? By the way, when they finish my class, that's amazing. My students can do this. And they didn't know what a stock was when they came in. All right. So, the blue dots set up principle. Stock is above or approaching the last green line top. It recently reached an all-time, and it's now bouncing from oversold. That's the FSS crossing above 30. It's a plus if it's also bouncing up off of the lower 15-2 daily Bollinger Band. After I buying, I enter an immediate stop loss at the bottom of the price bounce, or sell if the SFS closes back below 20. I said it best to do it after 3:30 because you sort of know where it's going to close. I will check the fundamentals and avoid a close near earnings release, because you know earnings can be crazy what they do to you. And it's a plus if the stock had a recent above average volume rise to an all-time high. Okay, so look, you got to get to the point where you use a setup that says a stock should behave in a certain way, and it doesn't, and you immediately sell it and you take a small loss. And you let your stop loss do it. You know, you got to do that. That's the only way to survive in this game. Okay? And I don't care. I don't care if I take these small losses. Every loss brings me to the next gain. All right? Here's Palantir. All right? It's one of the ways I found this procedure. Here, look. Here's the earnings. Here's the blue dot. It was below 20. I even had a green line breakout here. Wow. Look at this buy. Whoop. All right, then hits another all-time high. Look at this. It's a oversold bounce right here. Look at this. Boom. All right. Now, here's some more. All right. Not every blue dot bounces, but if you have a way of putting in a stop, you get out, it comes back, you do it again. Look at this one. It's all above the green line. These are all-time highs. All right? Look at gold. I traded gold this way. It's interesting that when gold gets this oversold on this stochastic, the bounces often are tradable. Look at this. This one it did, but the bounce didn't hold, so you get out. Another bounce. All right? Here's the SLT. Just look at the bounces and look at the oversold. These are all green line. They're above the green line. The stock is trading at a series of all-time highs. What an incredible setup. Bounce, bounce, bounce. If you're into options, you could sell cash secured put at this point if you want. Here. Okay? Next. All right? Here, didn't work. Here, it held the bounce, went up here. Here, it had another one, it failed. You're out. Here, another bounce. Okay? Here's another one. Travelers, which is, I think, in the Dow. Look at this. I love finding stocks in the Dow average that get really oversold because you know they're not going to go out of business probably, with the exception, I think, of GE at one point. But anyway, look at this. Now this is below a green line, by the way. So, but this is after the green line. All right, Philip Morris, which I don't like to trade because I'm in the stock prevention and addiction research area, but look what this did. Look at this. Above the green line. All right. Look. So lots of times, if you have a green line breakout like this, you could just put the stock away, and as long as it doesn't, lose the green, go below the green line, you just hold the stock. Look at that. Here's another one. Dot. Look at the lower. You see it. VRNA, great stock. Look at this. All right, here's your blue dot. Failed, so you're out. This one didn't fail. Your stop is right here. Look, another one, and then of course it was bought out. Oracle, it's been a great stock. I'm going to show you this in a minute. Look at all the failed blue dots. It fails in a downtrending stock like this. Look at these fast-moving averages below the 30. Now they come up above the 30. Look, blue dot. Earnings came out. Here's your green lines breakout on Oracle. Beautiful. Notice, again, a preview of things to come. Notice how it's following the 8-moving average. Is that fantastic? Here's Palantir again. Blue dot. This one. Okay, failed, put the stop here, you get sold out, gives you another one, you buy it back. One of the things that I've learned over the time, and I know, a lot of the pros already know this, that if you like a stock, if you've done the research, you like the stock, it's doing well, it's been a GLB, and you get shaken out If it gives you a new buy signal, buy it back. A lot of people got shaken out and now maybe shorted it and now it's going up. Okay, look at this. All right, Palantir. GEV. A lot of people are trading GEV. Here's your GLB. All right, so you had a breakout to an all-time high. Here's where it becomes oversold. It's still among the green line. Look at it. Look at that. All right. I don't know why this works. It seems to me that many significant rises, look at this, begin after becoming extremely low, oversold with the SFS below 20 and bouncing with the SFS crossing back above 20. I don't know why it works. All I ask you to do is put the SFS on your daily charts and see if it provides useful setups. Teach yourself what it looks like and how to use it. I really don't understand why it works. Maybe a whole bunch of charters with a lot of money are watching it. I don't know. Or maybe it's correlated with something else. All right? I told you this already. In a downtrending stock or market, blue dots fail. You must have your stops in place. I went to an IBD meetup, and I saw a really nice guy presenting to the group Apple. And he had worked it out. He showed how he made money on trading it with his setup. And I looked at it, and I said, you know, in a stock that's as strong as Apple was at this time, you could have bought every Monday or every Wednesday. And you could have bought on, heads or tails, and you would have made money. All right? So when you see people talking about setups and showing you all the winning ones with their setups, or maybe even a book of all the great stocks and all these setups that worked, they can mislead us, especially people new to this. You think that these setups always work when they don't. And they need to show. I'm suggesting that anyone who comes up with a list of winning stocks have an appendix or a chapter that says, this is when they failed. Because depending on the market, the setups that you use will fail. And you have to be ready for it, and you have to set the risk for it. All right? Here's Apple. Look at Apple. Apple's been, lousy as a stock. It's below green line. Look at this. And look at all the blue dots here. Yeah, it's having all these oversold points, but look at it failing. So do you buy it here because it's oversold bounce? I wouldn't. Still below the green line. Okay? Toast, same thing. Great company. When you go into a restaurant and they take your order and you pay for it online and everything, a lot of them are using Toast. But look at all the times it failed. So you watch it, and then earnings came out, and it went up. But anyway, all the blue dots failed there. All right? Now, I'm making a shift now. And I found out about the ADMA from Richard and from Pat Walker. Pat Walker is a fantastic trader and teacher. I loved listening to him. You need to go to his videos and see it, and you need to go and watch the interview that Richard did with him. And he talks about trending stocks, and one of the things he uses is the ADMA. Okay, you can follow him on X at PatrickWalker56, and you can find videos that he's posted just about the ADMA. This is one of them you can see. And his group, he has a service, it's called Mission Winners. And it took a while to sink in, but I started looking at the ADMA, and I was flabbergasted about how well it works. And I'm going to show you. I'm almost scared it works so well. Okay? Many growth stocks trend on the ADMA for weeks. Here is a setup I like, and this is my addition. I combined the GLB with the ADMA Bounce. Scan for stocks that have had a GLB, are riding the EMA, and bounce up off of it. Now, that's a great setup when you do a bounce, because if the bounce fails, you know exactly where you're wrong, and you know where to put your stop, and you get out. Buy on the day of the bounce and place a stop below the low of the bounce. Sell after one. I like to sell after 1 or 2 closes below the 8 EMA if it's been trending. You know, you have to look at these moving averages and look at the stock's history. Some follow the 8, some follow the 30, some follow, you know, all different ones. And you want to use the one on the stock that it follows, basically. All right? Look at this. I mean, you can't look at this and be, I can't look at this but be amazed. This is the 8 EMA, all right? These are the other ones, the 21 EMA, the 8, the 21, and this is the 30 simple moving average. And look at this stock. It has a GLB. And by the way, before it had the GLB, you could look back on the day of the GLB and say, wow, this stock follows the 8. And it has a GLB, and the 8 is following the 8. You buy it either on this day, with the idea that you'll sell if it closes below the green line, or you wait for it to bounce the 8. All right? Notice how it's not breaking above, it's not staying above the top Bollinger Band. Told you it does that. Anyway, look, this stock is above the 8 EMA forever until here. So you buy it. If you don't buy it here, you find it, you buy it here. Maybe you buy it here, and then you wait. If it closes below the 8, that's a danger signal. If it closes a couple of days and the 8 isn't rising, you get out. All right? Here's Microsoft. Can you believe this? Here's Microsoft going above the 8 forever. Had one day when it was right on it. But look at this. Here's your GLB. So you have a GLB. Then look at the 8. It's following the 8. You buy it here maybe. Remember, you don't get whipsawed here because it didn't, even though it went below the 30, below the green line, it closed above it. And then you buy it maybe, if you didn't buy it here, you buy it here. Right? Didn't close below the 8 here, so you're okay. Maybe you buy it here. It went over here, but it was only one day. Boom, came back. Maybe if it closes below, you put a stop over here. Look at it. I mean, how can it be so great? You know, I don't know why this works. Maybe there's a whole bunch of people who use charts, and they all say we're going to buy it when it hits the 8. I don't know. Well, I don't really care. As long as it's work, I'm going to use it. Look at Oracle. Green Line Breakout. It's above. Look at this. It's above his earnings. It's above the 8. Look at this. Follows the 8. Gets above. Gets a little extended here. Comes back down. Comes back to the 8. Maybe it gets sold out. Not here. It retakes the 8. Look. You see that end? I had a note there. It retook the 8. This is a buy signal right here. It's above the green line, and it's bouncing the 8. Oh, I got to tell you this story. My friend Judy calls me on this day, and she calls me on this day, I believe. And she says, CRWV, it has a high short interest, you should buy it. So you know what I do? It's first thing in the morning. I don't like to trade first thing in the morning. I go ahead and I go and market surge, and I look up the fundamentals, and I see the stock is losing money. I said, I'm not buying a stock that's losing money. So I let it go. I didn't look at the graph, and I didn't draw the green line. If I had seen that this stock on this day was having a green line breakout, I would have bought some. Because that stock went from 64 to about 170 in a couple of weeks. Look at how fast it went up. And what I want you to notice, and this is amazing, look at the 8-day moving EMA. Never went below it. It bounced it. Could have bought it right here on the bounce if you were scanning for this. Look at this. Now, you got some closes below the 8. The 8 leveled off. Time to get out. Take your profit. I'm just amazed at this, and I was kicking myself that I didn't look at the green line breakout. All right? Here's the chart showing the weekly chart. If I had looked at the weekly chart, look at this. It was an IPO breakout. Here's the IPO. Went to the 64, 62. Went sideways for 6 weeks. This is the Livermore setup I told you about. Broke out, wham. And I want you to notice something. I'll get to it in a minute. This is a weekly chart. Look at the 4-week moving average. It's the 4, the 10, and the 30. It hasn't been around long enough to have a 30. But I want you to notice it's climbing the 4-week. Don't forget that until it doesn't. All right? ITRA. I traded this. Look at this. Had a green line breakout. It's above the 8. Look at this. Hadn't closed. I don't know if I got it through. Anyway, it hadn't closed below the 8. Look at all the times you could have bought it off of this bounce. Okay? Oh my God. Look at SEZL. Green line breakout. Look at it. Oh my God. Look at this tracing the 8. So I finally said I got to buy it right on this day. It closed below the 8 and I got out. But I'm just telling you, I hadn't scanned for this. But look at that. Rocket Lab. All right, daily chart, green line breakout. I traded this well. Look at this. Following the 8, following the 8, following the 8, on the 8. I don't know what it did today. It's right on the 8. Okay? So, you know, if I had the gong that I had in class, I would say this is a golden nugget. All right? Sign up to get my tweets at Wishing Wealth, because I put out, this is a tweet I put out. Rocket Lab had a high volume GLB on Thursday. See daily and monthly charts. You can go to my blog, you can see it. I've done this over and over. Look at this incredible rise. This almost looks like a flag, and then it broke out. Okay? So here's Palantir. Why am I showing you this? I think I'm showing you this this is a daily chart. Here's a, see this? Bounce, 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 blue dot. Okay? AVAV, green line breakout. Look at the high volume here. Bounce right here. Oh, I love Hood. Love Hood. I traded this. Look. Well, a lot of my students have Robinhood, but look at this. Here's a monthly chart. All right, went to here, 100.92, went way down, turned around, and then had a green line breakout right here. And I got interested in it. So here's the daily. Notice, before it had the green line breakout, notice it following the 8. Is this amazing? Look at following the 8. I can hear Pat Walker saying this because he's showing this in his website all the time. Look, here's your green line breakout. Here's your buy. If you didn't buy it here because it's following the 8 and saying I'll get out if it closes below the 8 or the green line, you buy it here, buy it here, bounces off the 8. Here's your, bounce off the upper Bollinger Band, and it's now just, this is as of today. It's just on the 8. You could potentially buy it here today and put a stop here. I don't know. Okay? The best time to buy it is on the breakout. And here's my blog post. Day 45 of the QQQ short-term uptrend. Hood takes off with a high volume GLB and closes at all-time high. So I'm telling, look, I don't sell this. What I've tried to do since I started teaching it at the university, I've wanted to help people learn what I'm doing, learn what I've learned. After doing this, I'm sorry, I think I've done it 60 years now. Okay, I'm just giving you the benefit because you get so much junk put out in social media, so much junk with people just selling you stuff. When I tell the students, find someone who's walked the talk and then learn from them. That's why a load of people go to Mark Minervini and learn his things, and the other people who've done it. I'm a different type of trader. If you want to be someone who watches the market every day and goes on margin and takes, in a sense, risks and trades, loads of times, like in the U.S. Investing Championship, go for it. But I'm not doing that. I would rather have something quieter. I can find my setup. I can put my stop in. I don't even have to look at the stock during the day, depending on the stock. Okay? Now, here's Hood. Here's the weekly chart. Now, this is a mistake. This is not the ADMA. This is the weekly chart. And what I wanted to show you, forget this thing. You see the 4-week average? I don't know why this is true. And maybe it's mathematically could be proven. I have found that a lot of stocks following the 8 EMA, like I've been showing, if you put them on a weekly chart and put the 4-week on, this is the 4, the 10, the 30. Remember, they're above the 30. It's stage 2. I love the 10 above the 30. They follow the 4-week average. I don't know why. But you know what? If you don't want to do all this daily stuff, or you want to make sure that you've got a good stock, put this chart up, the 4-week, the weekly chart. Look at the 4, the 10, and the 30, and see if you have a pattern. You see these green bars? These show bouncing off of the 4-week, because sometimes I would buy off of the bounce and put my stop right below the weekly thing. All right? Now, I also did, Judy's been telling me about Joby for several years now, and it finally had a Green Line Breakout. It's going to have electric flying cabs. They're finally taking off. And I'll tell you, she told me about it here. She loved it. I think she was buying it down here at 3. But the stock is finally breaking out. You may want to keep an eye on it because it's a whole new industry of flying cabs that are electric that can take you like to the airport at 200 miles an hour, and you can avoid the traffic. And Saudi Arabia has it, and a bunch of, you have to go and read it. A bunch of car companies and a bunch of places are investing in this, okay? Here, ARKK, Kathy Wood's stock, she's had a really great time, where her ETF went way up, and then it went way down, and now she's starting to do well. I just want to show you this. This is the daily chart. This is the 8 EMA. Why is it that her stock is tracking the 8? Are people looking at it and say, I'm buying at the 8? I just don't know why it works. All right? Now, I scan for stocks that are in an uptrend, that have been near an all-time high and are bouncing the 8 EMA today. I ran this stock today, this scan. This is how many stocks came up out of, I think, 6,000 stocks. I don't know. Anyway, they are, all of these stocks, I'm not saying go out and buy them. I'm saying go out and look at them. All of these stocks met that criterion, and I have them sorted by the close today, by the close a year ago. So this stock, Rocket Lab, is 9 times its price a year ago. Okay? I love to do this because Davis and David Ryan, remember I told you they like to buy stocks that have already doubled? Well, this is how you find them. So I love to pay attention to the stocks that are near doubling, when I'm looking for stocks, okay? Now, ASPI just came up today. Here's the chart. It's above the green line. Here's the 8, and it just bounced the 8. So, and it bounced off, you see that's upper Bollinger Band. If I were interested in this stock, Judy told me about the stock because it's in nuclear fission isotopes. She told me about it. I might consider buying it. I think I bought a little right here because it's a bounce off the 8 and it's held the 8. And, and it's holding the green line now. So that's a setup I like. All right? This is a stock. I don't know if it's on this list now. I don't think it is. This is another stock I traded. I think I bought it in this area after Green Line Breakout. And it had a nice rise. And I got out. I had, I think, a 30% rise gain in it. But all I want to show you is it's above and it's had blue dots. TTM, and I wanted to show you when I got it. Look at the 8. It's following the 8 up, then it starts closing below it, and it's over for now. Now it's back above the 8. Look at TTMI. How about this? Green Line Breakout, it hasn't closed above it. This is the first time it closed below the 8 right here. And now it closed again, so if I owned it, I probably would be lightening up or selling now because this is the second day and the 8 is now trending down. But look at it. It's above the green line. And if you were following it, you would have seen it tracking the 8 EMA. All right? I love CCJ. All right? Green Line Breakout, tracking the 8. Now it's not. Now the 8 is coming down. Now you have a bounce. Again, look, as these are different things. But it's holding, it bounced now above the 8 right here. So if you're following it and you liked it, you buy it here, you put your stop here, and you're holding. It's still holding. Look at it holding the 8. Okay? So, normally I do this with my students, but you're my students today. I tell them to buy companies you know about through your career or personal use. And if you don't like doing this, buy a market ETF like SPY. And for all of you on this, especially if you don't have one, open up a Roth IRA now. Let me tell you something. You get to my age, and I have a lot of money in my accounts, okay? But they're all pre-tax. I've been getting them at the university or on my IRA for many, many years, all right? So you know what that means? I have to start taking out required minimum distributions. When I take them out, I know that 30% of it's going to taxes because it's all taxed. You know, for every $1 million I have, I only keep 70% of it. 30% is going to be paying to Uncle Sam. So when I was doing this, there were not Roth IRAs. There were not Roth 401ks. Now they have them. You enter in that. You don't take a tax deduction when you do that on the money you put in, and you're never taxed. How crazy not to do this. So whenever I meet a young person who looks like they're working now, earning the money, I tell them all about Roth IRAs, and all of my students know about them. And basically the rule is you can open up a Roth IRA and you can put now $7,000 or how much you earned that year, whichever is less. So if you only earned $1,000, that's all you can put in. If you earn $10,000, you can only put in $7,000. You need to do this, okay? All right? There's a Harvard study looking at people over many years, and basically they said, building positive relationships is one of the 5 habits of self-made millionaires, according to one man who spent a half a decade studying wealthy people. Spend more time with people who make you happy. I know this is kind of strange, but I got to tell you this because I tell everyone who meets me. I was born with very high cholesterol. My father died at 39. All of his sibs had heart attacks. And I was fighting high cholesterol all my life. I went to every lipid research clinic in every city that I went to school. I went to, last one was Johns Hopkins. I went to City University in New York. I met with the guy who did the Framingham Heart Study, the famous guy there. I did, and I was on every drug that they made to try and bring down my cholesterol, which untreated was over 400. And I watched an interview of Bill Clinton with Sanjay Gupta, and it turns out that Clinton's family wanted to help him because he had heart issues, and Clinton went to look for the best science that could help him, and he found this guy called Esselstyn, and you'll note at the top the book behind Bill Clinton's life-changing plant-based diet, and I went on the regimen. I've actually met Esselstyn, and that book has saved my life. It brought my cholesterol down to normal. When I tell doctors who I'm seeing that it was all a nutrition-based system, their eyes glaze over because physicians aren't taught prevention and they're not taught nutrition. But I'm telling you, I'm living proof. If you know of anyone fighting heart disease, needing stents, having inherited heart issues, whatever, read this book. It is amazing. Okay? So the homework for you is review this presentation and try out the blue dots in your charts and the GLB with the daily 8 EMA. Review my TraderLion conference presentations from 2021 and 2022. The links are on my blog tab. You can also go to TraderLion and find them. Watch my wishingwealthblog.com or on X at wishingwealth. Sign up for the waiting list for the new TraderLion masterclass that Richard and I are really going to do. And well, you can watch this presentation. I guess if you're watching it, it's at least the 27th. Here is the square to sign up and getting on the waiting list for the book that we're going to do. This book is not only going to teach you how to do what I do, but it's going to, I've been using TC 2000, but Richard's going to interpret it all in deep view, so that you'll be able to have a section that'll say Dr. Wish's Blue Dot or Dr. Wish's setups, and they will all be built for you to try them out. And again, you don't just try them out and use money. You can buy one share at a time, learn how it works for you. That is very important. I read this famous person who made millions, who was interviewed about it. And he said, I could give out exactly what I do and very few people could follow it. So most people don't know how to do it. You've got to try it out, and you've got to ask questions. Richard said there were 50,000 traders at this conference. Wow. You can reach, thank you for listening. You can reach my blog here. You can email me here, but to be honest with you, I don't always trace this. I don't always look at this. You can direct message me through X at Wishing Wealth, because sometimes I'm more apt to see that if I don't get inundated with stuff. That's what I wanted to present. Thank you for listening. I hope that I didn't put too many people to sleep. But again, if it did, you can give your friends, a spouse, or whatever a copy of it, and they can do this instead of taking sleeping pills. I really enjoyed doing this, Richard, and I hope I didn't talk too long. And I got through everything, which I'm a little surprised at.
That was excellent, Dr. Wish. First of all, thank you so much. I do want to mention for the masterclass, which I'm super excited to be doing. We'll put the link in the chat right now. We'll also be in the description to sign up for that waitlist. Go ahead and do that if you're interested at all. We'll send out all the information to that waitlist first, so definitely go ahead and do that. And I can honestly say, Dr. Wish, your class changed the trajectory of my life. So, and I think it can help out a lot of people out there. So I'm really looking forward to do that. That'll be very special. One question I did have, I've got a few here, Dr. Wish. For people who are doing this part-time and don't have too much time to look at charts, during the day, which of the setups that you talked about today would you recommend starting, trying out first? Is it the Green Line Breakout, the Oversold Bounce, or the EMA Bounce? Which of those?
If you can create the software that will show people when it's a Green Line Breakout, I think that one is probably one of the most powerful. All the others are based on you having had a Green Line Breakout. You know what I mean?
Yep.
So basically, you want people to know this is a Green Line Breakout. They can take a look at it even at night, see if the volume was big, if it looks big, see if there were earnings or what it might have been, and then consider a pilot buy. You make a small pilot buy, and basically, I don't like using stops with Green Line Breakouts because I told you it can go back below and you get shaken out. But if you have to do that and you're not going to watch it, you can't watch it at the close, then put the stop, a little bit below the Green Line Breakout or about below the low of the day that it made the Green Line Breakout. And this is important. If it should whipsaw and you get stopped out and it closes back above it, make sure you buy it back. That's what I would do.
Yep. And we've talked about this a little bit, and I'll just mention it here. I love when a stock has a Green Line Breakout and then forms a base or has the first pullback to the 21 EMA after the Green Line Breakout. That is just like the most powerful setup there, and easy to manage risk, just the low, the bounce there. One question I did have.
The Blue Dot is looking, as you know, the Blue Dot is looking for a bounce, but instead of the 21, which is very good, it's looking at for instance, the 8,
Yep, 100%.
Yeah.
One thing that was one of my biggest takeaways from taking your class that I think would be great to mention here, more on the sell side of things, is your advice to us during the class was whenever you're thinking about selling, maybe there's a scary drop on one day or whatever it is, bring up a red, white, blue pattern chart or a weekly chart and see if it's actually changed trend. And if it hasn't, consider, giving it another day or another day. And that, I think, was just such a simple but very powerful thing that can keep you in some of these long trends until they truly end, until it starts breaking down, forming another base. So just wanted to mention that there. Anything else you want to add on the red, white,
Thank
blue
you for
chart?
mentioning that. I have a
Yeah.
post-it on my slide that
Yep.
says, look at the weekly chart before you sell.
Yep.
And I don't do it enough. I don't do it enough because you get things start falling and you get scared or whatever, and you want to sell. But a number of times I got out of stocks that were really continuing up, and that the adjusted guppy chart is phenomenal for showing you that the stock is still in an uptrend and maybe you shouldn't get out.
Yep. And we'll have a preset in Deep View that is the guppy chart, so you guys will be able to quickly click to that and see it. Dr. Wish, again, a pleasure as always. Definitely recommend for everybody watching it. If you enjoyed this and this is your first time learning from Dr. Wish, check out the previous presentations he's done. Really, really excellent. It goes into even more detail into the concepts. So Dr. Wish, thank you again for being a part of this. Do you have any last advice for traders out there who, maybe they're more advanced, maybe they're just starting out? Any advice with either trying your setups or trading in general?
Well, thank you. This is not easy. If it were easy, everyone would be millionaires. And you've got to, I like what the turtles, the famous turtles said. They approached every stock like they thought it would fail, and that way they would know when it failed, and they knew what to do. So I think people, especially starting out, should start slow. I really think they should start with one share of stock and try that for a while, and see if they have a good temperament for it. And if they don't, like I said, don't. I used to tell the kids, as you know, if you don't like this, they did the simulation. If they didn't like it, great. Think what they learned. They saved money. Buy an index ETF or find someone who can help them. Exist in this, because not everyone is good at this. Not everyone wants to do it. But if I find it a lot of fun to do, but one of the things I didn't tell them, and this I know I told the class, one of my prime sell signals is, I just added a new one, by the way, Richard. One of the prime time sell signals is when a stock is going up gangbusters so much that I basically, my little voice says this is too easy, I should sell. I literally sold out Yahoo at over $400 a share because of that, And when a stock, you're plodding along in a stock and it's going up a little, each day or each week, and then all of a sudden it has a big rise like that you never expected. I oftentimes will get out. Maybe that's like a climax run. The second thing that I just learned, I think someone else said it in social media, but it works with me. My wife doesn't follow anything I do in the market and has no interest in it. But once in a while, if I've made a lot of money or everything's looking good, I'll tell her that. And usually that's at least a short-term top.
Yep.
And that's happened a number of times. So you gotta watch out. And I think, to be honest with you, when I look back at what I've taught the students and everything, what I probably should have put more time into is how to sell and when to sell, and people have to, I've talked a little bit about that today, about, following the indicators, but you really got to have a plan. Like I never have, some people will say, how much do you expect to make in a trade? I don't know. I expect to ride it until the trade goes against me or it fails my indicators. Do you know what I mean? So I don't do that. I don't say, oh, it made 15%, so I'm out. Maybe I should do that. But another thing I noticed, by the way, and I don't think I've told many people about this, is if I have a watch list of stocks I'm trading that may have 5 or 10 stocks, and I see a day when every one of them is going up, that's a warning sign. It's just everyone is bidding up. They're bringing the stocks up. I got to be very careful. Maybe I should move stops up, because oftentimes that's the end, not the end of a major move, but the end of a short-term move. I don't know. Have you ever noticed that, Richard?
Yeah, for sure. When especially if it's up several days in a row into that, close to an upper Bollinger Band, everything gaps up in the morning. Yeah,
Yeah.
exactly.
Right. Anything else?
No, I think that's it. Dr. Wish, again, always a pleasure to speak with you. To everybody watching, I hope you guys enjoyed. Hopefully you can take away at least a few things here. And Dr. Wish, thank you so much again for your time. And yeah, thank you.
Thank you. And one thing that you didn't mention is the book that you recently published. And let me tell you, when talk about selling and the risk, managing risk, I found that to be one of the best books to specifically tell you how to do that. So I recommend that everyone read that and learn how to do that. That was just superb.
Well, thank you. And I want to mention in your forward, you made your favorite joke that you didn't mention here today, that why you're into both substance abuse research and the stock market. Do you want to mention that joke there?
Well, I didn't do that because Judy told me not to talk about my history. No one cares about my academic history. But when I would introduce myself to audiences, I would say that isn't it unusual? I have this career in substance abuse, and I do this thing in stocks. What's the link? And I say, well, because they're both addictions.
Yep.
And they are both addictions.
Yep.
But thank you for reminding me on that.
Yeah. Well, we can sense your passion. So thank you again to everybody watching. I hope you guys enjoyed, and we'll be right back with the next presenter.
And sign up. Get me over.
Yes.
Get me over 30,000. I want to get to 31,000 on
X.
On X. I know you used to say that, when you were starting out. And I'd love to get it up. I've been at 30,900, I think, for a while. So please sign up for it.
Yeah. We'll link that below. So again, thank you everybody, and we'll be right back.